Before you skip this video, listen carefully. Opendoor stock has become one of the most unpredictable movers in the real estate and tech world. One day it's falling hard, the next day it's jumping like crazy. Investors are confused, traders are excited, and everyone wants to know the same thing. What exactly is happening with Opendoor? In this video, I'm going to give you a complete and simple breakdown of the latest situation. The price action, the newest updates, what analysts are saying, the good news, the bad news, and what you should keep in mind if you follow this stock. So make sure you stay till the end. Let's start with what Opendoor actually does. It's a digital real estate company that buys homes, fixes them, and sells them using an online platform. The idea is to make home buying and selling fast, automated, and data-driven. But because this business depends heavily on home prices, interest rates, and overall market conditions, the stock moves a lot whenever the real estate market shifts. Now coming to the stock price. Recently, the stock has been moving between the $7 to $9 range, and the swings have been big. It's not unusual for this stock to move 10% up or down in the same day. Traders love this kind of volatility, but long-term investors see it as a warning sign. Most of the big moves are happening because of company announcements and overall housing market uncertainty. One of the biggest recent updates is Opendoor shifting its strategy toward AI and software. The company wants to rely less on the risky buy and sell model and wants to build more tools and technology around real estate transactions. Some analysts are calling this a major transformation. If this new direction works, it could make the business more stable and scalable. But until results appear, investors are watching cautiously. Another major update was the announcement of tradable warrant dividends for shareholders. These warrants give investors something extra. They can be traded or converted later at different exercise prices. This created excitement because it looked like the company was giving an additional reward to shareholders and boosting investor confidence. Then we have earnings. Revenue recently came in better than expected, which is a positive sign. It shows that the company is still managing to operate and adjust. But at the same time, earnings per share were negative. That means profitability is still far away. The company also warned about softer revenue in upcoming quarters due to slow housing activity, so the outlook is mixed. Now let's look at both sides honestly. The positives are clear. The AI pivot could help the company in the long run. The warrant dividend increased investor attention, revenue is showing signs of improvement, and some parts of the housing market are stabilizing. All of this gives hope to investors looking for a turnaround story. But there are serious risks too. Some valuation models show a fair value much lower than today's price, meaning the stock might be trading too high compared to the company's actual fundamentals. The housing market is still under pressure because of high interest rates and affordability issues, and because Opendoor buys homes directly, they carry huge financial risk if home prices drop. Volatility is extremely high, and one wrong move can hit traders hard. So what does this mean for different types of people? If you're thinking long-term, you need patience. The company is changing its business direction, and those changes take months or even years to show results. If you're a short-term trader, the volatility is an opportunity, but only if you use stop loss and risk control. If you're just observing, then keep an eye on housing data, interest rates, quarterly earnings, and how the AI shift performs. These 4 things will shape the future of Opendoor. To sum it up, Opendoor is a high-risk, high-volatility stock that's going through a big transformation. Some investors love the potential, others are scared of the uncertainty. The right approach is to stay informed, stay cautious, and never make decisions based on hype alone. This video is for educational and informational purposes only. It's not financial advice, and I'm not telling you to buy or sell anything. Always do your own research or talk to a licensed financial advisor before making investment decisions. If you found this update helpful, make sure to like the video, subscribe to the channel, and tell me in the comments which stock or company you want me to cover next. Thanks for watching, and I'll see you in the next video.